let's go onto the other side of the divide, away from the economists and their prognostications, over to Simon Meyer, the founder and CEO of Australian executive recruitment firm FutureYou, live in our Sydney CBD studio. Just getting a good work out of that studio today. Welcome, Simon, to the program.
Hi, Carson.
Your thoughts first off on this pivot into part-time roles, the trend on that. What does it say to you? Are we talking here about a genuine shift in business mentality, or this is simply a workforce demanding more flexibility and getting its way? Which of the two is it?
Look, I think you're right. We might be onto a trend. You know, I think Australian business is definitely responding to individuals' demands around more flexibility. They want a better work-life balance, play in terms of how they engage with organisations, and I think, you know, we saw it pick up in 2015, and so far in 2016 that trend's continued.
That said, the participation rate is at its lowest level since 2007. Is that suggestive to you of an ageing population and just the gradual winnowing out of the workforce, or a real sense of, I don't have the skills, I'm not going to go into a marketplace where I can't find any kind of matching on what I might be wanting to do?
Yeah, look, I think my angle on that is in the executive recruitment market. So let's say 150,000 Aussie dollars up to $500,000. I think people genuinely taking a little bit more time to find the right opportunity. House prices have increased nicely in Sydney and Melbourne over the last 10 years. People have a bit more equity to play with. It's allowing them to be a bit more patient around finding the right opportunity. So if they can't find it, they're not necessarily participating.
And Simon, a lot of head scratching in the trading community about the weak wages data that we're seeing. Does wages growth correlate to your business, and if so, are you getting any indications around what might be happening in that space?
Two key things there. So I think basic salary packages, very, very set against fixed cost bases for organisations. So Australian business continuing to work hard on making sure their fixed cost base is under control. Where they're prepared to pay more is on performance. So what we're not seeing in that data necessarily is the increases in bonuses or the return for people who actually deliver on the bottom line for the companies that they're part of. So I think the numbers are a little bit misleading in that context.
Do you think it's possible to actually go out and scoop up that data? Is it something that could be, added to the list, quite simply, just to give us a further flavouring?
Yeah, definitely. I mean, I think organisations continue to talk to us about innovative ways to engage with talent and how to package salaries appropriately. But as I was saying, at the same time, they're looking at their fixed cost base and making sure that's under control. So it's definitely a trend there, Carson, but it's taking time.
Look out for me into the next 6 months on the horizon now. Where are you saying greatest demand is likely to fall? Where are the hot sectors, the sectors to be basically the ones on the watch list in a good way?
Yeah, look, great question. I mean, e-commerce continues to power forward, so anything that's got digital in it. There's a heavy emphasis on acquiring talent. Most sectors are behind in terms of their e-commerce and their digital platform, so they're hungry for talent that can add value in that space. Anything that's infrastructure related, so let's take New South Wales as an example, powering ahead in terms of construction, particularly in the commercial and in terms of roads and infrastructure. So service-related companies that are supporting that, again, huge growth. So those two are pretty good examples of talent short markets at the moment. It's
interesting you touch on what is effectively also therefore the collision between public and private sector wages. Yeah. We saw quite a blowout actually in the private sector wages in the West, which is mired in recession, which is rather perverse. It's actually the public sector there is keeping a lid on it. How is it likely to play out on that infrastructure story, with matching skills to the task at hand? Do you think there'll be a meeting on those expectations, or they'll have to pay above the odds?
Yeah, look, I think the public sector's definitely been pushing pretty hard to acquire the right sort of talent. So it's forced some of the core sectors that we focus on, like financial services and retail examples, to adjust in terms of how they play the game and what sort of packages they're prepared to put on the table. So it's an interesting balancing act, but the growth and the drive in public sectors had an influence on the private sector side for sure.
And just picking up, how is the retail sector performing at the moment?
You know what, the top line would say it's not great in terms of opportunities for executive talent. Just below the surface, though, there's some pretty entrepreneurial things unfolding, particularly in the small to medium-sized space within retail. And that's actually a trend overall. You know, there's a lot of people who are prepared to take a more entrepreneurial role in something that's private equity backed or something that's privately owned and move out of the corporate. And the stable backdrop's allowing people to do it. And retail's a really good example of that as a sector.
And are you seeing that those entrepreneurs, that the plan has got legs, or you find no sooner have you been wowed by it than you're hearing it's folded?
Look, it's entrepreneurial, right? So the risk factor is increased, and I think people who make a decision to take a career in that part of the market are going in eyes wide open. But clearly they're also chasing the return. You know, as you said, base wage is fairly static, so people are looking to get involved in something where there might be a strong long-term outcome for them. 5 years, 6 years. Take a piece of the equity deal and do very well out of that. So yes, it's a bit more risk, but equally could be some more return.
And now to paddle my own canoe, Simon. How's the finance looking?
Yeah, well, it's not a bad space. Continues to be static. Everyone needs someone in finance, so continues to be a pretty stable market.
Just don't say ANZ. Thank you so much. Appreciate it, Simon.
Okay, cheers.